morning, everyone. Today is March 15th. Thank you so much for joining into our weekly healthcare reform webinars. My name is Deb Wilkinson. I'm the Vice President of the Health Plan Options Department at URL. And if you've not done business with URL in our Health Plan Options Department, I encourage you to call in. We have a great staff, an eager and very quick staff to help you in your group health and health insurance needs, including employee benefits. If you're new to the format, you can ask questions in one of two ways, and you're encouraged to do so. You can raise your electronic hand icon in the control panel to the right of your screen, or you can type in your questions in the question box, and I'll answer that at the end of the webinar. We do have a lot to talk about today. It still never ceases to amaze me how much change happens in a 7-day period, but you know, it happens, and I applaud all of you for joining in and being, you know, regulars on this format, because that just tells me that you're doing what you should do and staying informed, being that consultant that your clients need, whether the individual market, you know, short-term, group, or employee benefits and self-insured. So, you know, you should be proud of yourself for taking the time to join in. So let's get started. States continue to look at ways to escape the ACA or embrace it. We talked a lot in the last several weeks about Idaho being kind of the first state to come out and say we're going to offer non-ACA products to our state, and unfortunately they were shot down by CMS. It does look like there is a path forward, but they cannot do it themselves. It has to kind of be done in conjunction with Washington, which, you know, kind of maybe defeats the purpose, but we'll keep watching that and see where that goes. On the other side, Maryland, California, Washington, Connecticut, and DC are looking to require insurance even without a federal mandate. Maryland went even further to say that they are proposing actually duplicating the tax penalty, putting it into, you know, a state sort of fund, and use that money in addition to any tax subsidies that the insureds would be eligible for, and use that money to actually buy insurance for those individuals. And that is a proposal starting in 2020. You know, I guess that's Big Brother at its finest. We'll take all the money that, you know, the penalties and the subsidies, put it in a big pot, and we'll just buy everybody insurance. So who knows? I guess it's a good thing that people are trying different things, but of course these states are definitely more in tune with the ACA and certainly want to keep it, as opposed to, you know, for instance, Idaho wanting to get rid of it. So it'll be interesting to watch how all this shapes up. You know, from my perspective, it's a bit counterintuitive when clearly in Washington they're trying to eliminate the ACA, but they are in essence propping it up. And I'm not sure, and again, this is just my opinion, I'm not sure if they're doing that so that it becomes even more horrific and, you know, there's no end other than to repeal, or if ultimately they realize that some of these things propping up the law itself will reduce premiums. But again, we'll keep watching and see where it goes. So let's see. Association plans. This is pretty interesting. In my newsletter, I have the 7 fact sheet about Trump team's new association health plan proposal. I think it's pretty interesting to review. You know, there's a lot of information out there, and, you know, this can go in so many different ways if association plans, as they're being proposed, are allowed to be created. You know, of course, association plans are and have been in place, not in our state, of course, but you know, this rule, or allowing these association plans and the way they're proposed, it would fundamentally change the way employers and employee relationships are looked at. So that could be, you know, an uphill battle. So it'll be interesting, again, to see how that shapes up. But, you know, we'll keep watching it. I just wanted to at least mention it. HSA changes in the Omnibus Spending Bill. They include increasing contribution amounts, allowing to offer more coverage for management of chronic diseases, such as, for medications, therapies that prevent these conditions from getting worse and ultimately cost more in the end, and also allowing seniors, especially working seniors, to continue contributing to their HSA as a way to offset the higher healthcare costs that are inevitably incurred. So that's interesting as well. Of course, the law does say if you're 65 and older, you can't contribute to an HSA. You can still use any money that was previously in there. But again, these are big changes to the foundation of some of these rules. So we're excited to see where all this goes. Alex Azar, the HHS secretary, went after the pharmacy benefit managers last week and insurers, and really being critical of their what he calls misuse of rebate. And I think a lot of us in the industry are aware that the big pharma companies rebate the insurers, and typically that's kept within the confines of their building and their health plans. But United Healthcare came out last week and said that they were going to start sharing these rebates with their consumers, and I think the pressure is on. I think the curtain has been drawn back, and I don't believe when folks know exactly how much these folks are getting, these insurers are getting, that they would be happy with with them keeping it as they have. So I think it's a huge step moving forward in the way these rebates are handled. So, and it's a positive for consumers, which is ultimately what needs to happen. So let's see what else we have. There was a late article that came in. I did not get it into the newsletter, but the CBO rated how the bill to shore up Obamacare would reduce premiums by 10%, they're saying. So this is all part of the Omnibus bill, but they're talking about premiums reduced by 10% next year and by 20% in 2020 and 2021 if some of these changes go through. And of course, we talked about some of the changes. We talked about the Alexander and Murray bills that were introduced last year. So they are kind of being energized and reintroduced. Part of their bill is to not allow funds to be used for abortions. They also would dedicate $30 billion for 3 years of funding for reinsurance and invisible high-risk programs, essentially reinsuring the insurers. The previous bill only funded 2 years, so this is kind of an advancement. Also, state flexibility, going to allow states more flexibility to design their own health plans and streamline the process. We'll see how that goes with what Idaho is experiencing, and also allowing catastrophic insurance plans to all Americans regardless of age. So those are some of the changes. I'll get that in my next week's newsletter, and if you want the article, I'm happy to email it to you. But again, some of those changes that are beneficial. So IRS decreases 2018 HSA contributions for families. $34.50 is the max contribution for single as it stands now for 2018, and the family was $6,900. Now it's $6,850. So just be mindful of that. Also, a new feature in our newsletter is going to be Elise's Corner, and what we're going to do, or what she's going to do, is just provide maybe some of the struggles that we have with some paperwork. If we notice a trend that a certain section of an application or certain errors are being made that would be beneficial for you to kind of know to avoid, Elise is going to offer those sort of helpful hints and helping you do business better with us and do business better in general. So watch for that. Also, group quote requests. We're going to have a new procedure for better quotes. Obviously, the quotes that we want to provide, we want them to be accurate. We want them to be you know, specific to the group. We don't want to quote a $1,000 deductible if they're at a $5,000 deductible HSA plan. So we want to provide better rates, better quotes, so that you can actually present something that the group may benefit from. So watch for some of those updates as well. We're just trying to, you know, again, streamline the process to better serve you, and less back and forth, and, you know, again, be mindful of the quotes that we provide for you. But watch for details on that as well. Geisinger is expanding their implant guarantee. It was a very short blurb, but it says in a new pilot study, Geisinger is offering a lifetime of free follow-up care to patients who receive implants such as hip replacements. So that's kind of encouraging as well. Talking about some upcoming events of interest, April 11th, Prime Pay series at 1:30 Eastern Time on using compliance, small and large group case studies, using compliance to earn more business or to gain more clients. So I think that's certainly timely and would benefit the folks on this call. And then also on May 17th from 3 to 5, CPHU is presenting cocktails with class, and it is at the Capitol building in, I believe in NOLA, and it's going to be sponsored by the American Heart Association, some hors d'oeuvres and some cocktails, but more importantly, it is a way that you can, you know, meet and talk with your contemporaries. And, you know, there's a lot of value in that when everything is so unknown and ever changing. It really does help to not only form relationships with your contemporaries, but also, you know, exchange best practices. So I would encourage you to watch for that invitation. And if you have an interest, register. It's $10 for members and $20 for non-members. So definitely affordable for most of us. So again, wanted to get that out there for you. And that's it. That brings us up to the open discussion and asking your questions. Let me see here if we have any questions. Just as you're formulating, just know that I'll be back here next Thursday, which is March 22nd at 9:30. Well, I have no questions. That is either really good or really bad. But as always, I appreciate everyone joining in. Please continue to join in and keep questions coming. It helps us get better and serve you better. And again, you know, ultimately it makes you better consultants to your clients. So again, I thank you for joining in. I wish you all a great balance of your week and a wonderful weekend. Bye-bye.